How did the 2020 presidential election affect our housing market? Stay tuned for this week's segment of Market Watch, where we talk about just that, as well as our predictions for what we're looking at for 2021. Hi everyone, it's Joshua Barks here with Keller Williams Realty Boise and the Barks & Co. Real Estate team. Thank you so much for tuning in to this week's segment of Market Watch, where we talk about the real estate market and what's going on here in the Boise area, and specifically regarding existing homes. This week you're in for a special treat because it's our deep dive into the monthly market dynamics for November of 2020 and how the presidential election influenced what we saw here locally. Typically we see during presidential election years, the housing market takes a small slowdown between October and November, and this year things were very interesting. So we also have our giveaway going on. I want to make sure I mention that before we get right into the deep dive because it's not too late. We have 1 week left and we'll be announcing the winner. So be sure to enter for your chance to win. The link for that will be in the description of this video. Answer a couple of questions and you enter for your chance to win an Amazon Ring doorbell and Echo Show 5. So without further ado, let's dive right into those market dynamics so you can see what the numbers tell us. All right, so the November 2020 market dynamics in the Boise area. So Ada County existing home sales. First, just like last month, I thought it would be helpful to see what happened this same time last year. So here are the market dynamics for November of 2019. So as you can see, starting in the market trends chart here, we had 620 active listings on the market in November of 2019, whereas 650 closed the month of November and 635 homes were pending. And then the year before that, November 2018, we had 762 homes on the market with 664 homes sold and 603 pending. So from 2018 to 2019, we had a dip in inventory overall for November. And then the number of sales was down slightly last November compared to November of 2018. And then the number of pendings was actually slightly up from 2018 to 2019. And this time last year, we saw an increase of 10.6% in the average sold price for all of Ada County. So from January 1, 2019 to December 4th of 2019, we had a 10.6% increase in the average sold price to a $359,680. 26 days was our average days on market, and then our inventory, the month supply, was just under 1 month across all levels here. And then one thing I want to note as well is that the majority of sales that we see over a 12-month period typically happen in this section here under 500,000. So you can see 200 all the way up to 499,000. We have, in the thousands here, except for this one between 350 and 400, which is just below 1,000. But everything else, the bulk of sales in Ada County happen in these price ranges. So that's what I really like to focus on for the bulk of the market, so you can see what's happening. Then when we get into what's going on in 2020, things are a much different story. As we know, this year has been incredible with the coronavirus and the election and other unforeseen things out there in the marketplace, making it very interesting for real estate and specifically the inventory challenges that we've been having. So let's dive right into that so you can see the blown up version of this before I get too far into these numbers. So first, the market trends chart. We had, like I said, 620 active homes on the market last November of 2019, which we knew was a slight decline from the 700 something that we had in 2018. Well, this year we have 156 homes, active listings in all of Ada County for at the end of the month. which is just absolutely bonkers. It's the lowest it's ever been for us since we started recording these, which is incredible because we thought our previous low was this 337 in February. And just before that, we thought our 374 that we saw in January, because our winter months tend to be the lowest numbers of inventory, we thought that was going to be our low as well. So we were wrong. We went down in inventory. Then we had, of course, our little uptick in March, April, May, when things kind of slowed down a little bit in the real estate market because people took their homes off the market. And as people were putting them on the market for sale, it was still a really good time to sell because things were still selling. It was just we were down by a few hundred year over year this last spring, but it was still a really strong spring. But then what happened is a lot of people that were on delay pushed that off into the summer. So we had the strongest summer that I've ever seen us have. And when we're looking at the 156 compared to the 620 active listings last year, we have 699 homes that sold in November of 2020. So we actually increased that as well from 650, and then 561 pendings. So there is a dip in pendings from the 635. So we've gone up every year so far, year over year in sales in the month of November since 2018. Probably before that as well, but I did not go back quite as far. And one thing to note with this number of pendings being a little bit lower than what we saw last year, which is also the first time so far since March that we've had a month with fewer pendings than we did the previous year. This has a lot to do with the lack of available homes out there, because I know if we had more homes on the market, based on how my buyers are acting and how other colleagues in my office are talking about their buyers as well, that we would have significantly more sales and more pendings there. So that's kind of month over month what's going on. Extremely low supply, still really high demand, a little bit down from what we saw last year, which actually you might even be able to infer not only is due to the low inventory, is because it's an election year, and we typically do see a little less activity during an election year because people hold off through the holidays and push off their plans till spring. So that'll be really interesting to see what happens there as well. So then when we're getting into year over year, what are prices doing? And last year we had a 10.6% increase at this time, and this year we have a 15.6% increase in the average sold price from January 1st of this year. So we went from 362 last year to just under 420,000 for all of Ada County on average sales, which is incredible. I still anticipate this number based on what we're seeing, as long as there are no major changes in the way things are working out in the marketplace, like a significant number of homes come on the market. And what I mean by that is not just a couple hundred, I mean 1,000 or so hit the market, and at least 50% of our buyers left the marketplace and decided no longer to buy. That's when things would start to shift, but we're not really seeing that with the numbers that we have here. So I do anticipate us ending the spring with at least another 5% gain in the average sales price. So with that being said, breaking down to the different price points that we have here, again, I like to start with the months of inventory and what we have. And as you can see, the average month supply is less than a quarter of a month, which is crazy. But that's, again, because we only have less than 200 homes on the market. And our average days on market is 20 days. And again, this is across all price points. So average for all price points, even above $1 million, is 20 days. So if you look at just the million mark, the average for above $1 million is 58 days on the market, and then it gets less and less and less as we go down in pricing. Now, the interesting thing that I wanted to point out between this year and last year is the shift in the number of sales that we've had for the bulk of Ada County. So last year, you may remember a couple slides ago, we had the thousands bracket pretty much here, all the way from 200 to 499, and the 350 to 400 was under 1,000, but the 200 to 250 was over 1,000. So that bulk of the sales that we see in Ada County has also shifted. So if that doesn't tell you, doesn't show you really what's going on with prices as things are, because it's very difficult to find anything less than 250 that's in decent shape, that is a detached single family residence that isn't like a townhome or a condo on the market right now. They're getting 10, 15 offers. It's very difficult. So make sure you have an agent that's going to be able to take care of you and navigate those situations, especially on the buyer side, even more so on the seller side, because you could be leaving money on the table by having a listing agent that doesn't know how to negotiate multiple offers, doesn't know what they're doing, and just accepts the first one they get, which isn't always the best. So there are a lot of caveats to go with that. So with the month supply, when you're looking at that, we are significantly a seller's market, as we have been all year, though now we're less than a month for all price points under $1 million, which is just absolutely incredible. What that means is, if no new homes came on the market and homes continue to sell at the current pace that they're selling, how long would it take to completely run out of homes? And right now, with only 150 homes on the market or so, that's less than a month. So 1.2 months for over $1 million, but under $1 million, all price points. We're looking at less than a month, which is incredible. We already kind of knew that going into this, especially if you've been keeping up on the channel. Part of the reason for that is interest rates. This year, interest rates have hit so many historic lows, and the 30-year fixed remained pretty flat this year. Excuse me, not this year. This year it's been dropping significantly, but this week, last week we were at 2.71 for the 30-year fixed, according to Freddie Mac. And this week we're also at 2.71. And for Thanksgiving week, we were at like 2.71, maybe 2.72. So things are still looking great on the interest rate front. A wonderful time to refinance. Or if you are out there and you've bought a home, say in the last 5 years, and you don't know what your home is worth, maybe you put less than 20% down because you got a loan. The one thing to think about is reach out to real estate professional you trust. I'm happy to help as well, to give you kind of a market analysis on what's going on with your property. Because of where prices have appreciated to, it may be a fantastic time to call up your lender and ask them to drop that private mortgage insurance. And you need to have that 80% loan to value or less. So what that means is you need to have at least 20% equity in your home in order to drop that private mortgage insurance. And your lender is not required to drop that automatically once you hit that. You have to reach out to them unless it's been so many years into making payments. I don't remember what year that would be, because it would very much depend on what your down payment is and other terms and things like that. There is a point where the lender thinks, based on when you buy the home, how long it will take for you to reach that 20% equity, so 80% loan to value rate, where they will drop off that private mortgage insurance. But that could save you a couple $100 every month in your monthly payment. So if that's something that you are wondering about, definitely reach out to your real estate professional. I'm happy to give you just a market analysis of what's happening around what would sell your home in today's market. Doesn't mean you have to sell, because all you're trying to do is figure out, okay, in this market, what could it sell for if I wanted to sell? Then you could call up the lender and say, hey, I think my house has appreciated enough and I've paid down enough to where I have that equity to drop private mortgage insurance. Most of the time they're going to require an appraisal, but before you spend money on that, see if it is even likely that appraisal will be close to where the pricing is, because maybe it's not for your house specifically, but maybe it is. So if you reach out, I'm happy to do that market analysis, give you kind of an idea, and then you can reach out to your lender to ask them to drop that private mortgage insurance if you have it. And like I said, they'll likely order an appraisal, but you'll have at least a decent idea on where the appraisal will likely come in based on that analysis. So when we're looking at overall, I do want to go back to the overall for November 2020. Again, inventory, all-time historic lows there, which makes it very interesting because I have not seen a whole lot of listings coming off the market, whereas they're getting canceled or going off just for the holidays to be relisted in the spring like we normally see, because sales are so happening so fast still, and sales are still going really well. Things are selling, if you're priced right, significantly over asking, and that is likely going to continue to happen well into the spring, especially here locally. Now, when you look at what's happening on a national scale, nationally, the National Association of Realtors and their chief economist is saying that nationally they expect us to appreciate maybe 5% next year in 2021. So January 2021 to December 31st of 2021, they expect an average increase in home prices to be about 5% overall for the nation. Now, when you break it down by state and what they're looking at overall, Idaho is in the top rankings on multiple lists for what projections are for sold prices as well as home sale activity. Because we've been up so much significantly this year in the number of sales and our price appreciation, inventory being where it's at with the demand of people moving in from other states and things like that, we are likely still going to see a very strong housing market here locally for well into 2021. I could confidently say at least through probably well on through the summer, just because we have so much pent-up demand. And I bet there's even more of people that are on the sidelines because of the coronavirus, just like there are people on the sidelines that have been wanting to sell their house but aren't because of the pandemic as well. So that's kind of overall what we're looking at. If you're thinking about buying, selling, or investing in real estate, really you just have to think about, do you have a good enough reason to move right now? And then most importantly, can you afford it? Does it make sense for you and your family? The best way to figure that out is to reach out to your real estate professional so they can set you up with a fantastic lender that can go through all of your options and really figure out what your comfort level is going to be for your next move. Whether that's just refinancing and remodeling your current place, or maybe that's taking some cash out to go find something bigger with that home office because you've realized this year that you've outgrown your space. Basically, if you've answered yes to being able to afford it, that you think you can, and you have a good enough reason to move right now, just reach out to me. Talk to your real estate professional. If you have any questions about anything that we've covered, please also feel free to reach out. That is just what we're here for. As you can see, my number is 208-914-1095, or always feel free to send me an email or visit my website for more details. All right, so there you have it. That's what happened in 2020 as well as 2019 for November monthly market dynamics. I think it's really helpful to see those year-over-year comparisons. As you saw, the presidential election really didn't influence our housing market here locally. Yes, we did have slightly fewer pending homes than what we saw this same time last year, though a lot of that has likely more to do with the fact that we have very, very, very limited inventory out there. And with these numbers, we're still anticipating a very strong spring market well into 2021. So stay tuned for next week's segment of Market Watch, where we will talk about the week over week numbers and what's going on now in December. Thanks again, and we'll see you then.